Hello, everybody. Yeah, my name is Thomas Hart. I will be leading the session with Dan as the speaker from Africa Arena in terms of a playbook for research and innovation investment, how African innovators can engage investors and raise investment in Africa. So, yeah, the session today, this workshop, will be hosted by myself, Thomas Hart, who's the program at Metis, and Dan Baez will be the speaker in terms of the investor engagement and raising investment workshop. So just quickly, a short brief introduction into Metis, who I represent, who's part of the consortium of the seed project. Metis is a global network of innovative organizations that have been spurred through a venture studio. Basically, Metis consists of three pillars, which are digital innovation in terms of design and development, performance, which consists of consulting and hosting, and innovation development through incubation and acceleration of African innovations and startups. The Metis Group was founded in 2004 by Christophe Valnard, who's the founder and group CEO. Basically, Metis is a group company consisting of three innovation and acceleration organizations: FSAT Labs, the French South African Tech Labs, Africa Rise, Africa Arena, and then in terms of consulting and digital innovation, it's Metis Digital, Metis Consulting, and Paid Genius. Just introduction, we're all here because of the seed project, so we'll just provide a brief overall of why we're here and what the seed project is. So the seed project is a European Horizon project, funded project that consists of 12 consortium partners consisting of Bononoff, Hyperspace, Rich in Africa, Metis, the Technology Innovation Agency in Africa, and then in Europe it consists of EBN, Bononoff, BPI France, Wazinas, and the project lead is Steinbeiss. So the project mission of SEED is to strengthen European and African digital ecosystem through research and innovation cooperation between ecosystem players in Europe and Africa. The project has undertaken a human-centered research and process in terms of stakeholder needs and gaps and support. We're also providing the project also provides development programs to support research and innovation in the digital ecosystems of Europe and Sub-Saharan Africa. In the last year and a half, we have implemented pilot projects and initiatives in 4 regions of Africa: Kenya, Senegal, South Africa, and Ghana. That a lot of programs such as learning expeditions, soft landings, twinning programs, and a host of webinars that have been hosted to facilitate that cooperation between Europe and Africa. So the project has been based on 4 pillars, which is the mapping of the research and innovation and digital research and innovation, the digital ecosystem in Sub-Saharan Africa and Europe in terms of collaboration. Then basically from that, we have centralized digital environment for research and innovation development support. through the Enriching Africa Center and the platform. And then for the last year, we've been basically going route to market in terms of soft landings, pilots, webinars, 20 programs, summits, etc. And then the last pillar is the expansion of the project to additional African countries in Europe. So yeah, our methodology in terms of the last year and a half has been to understand, discover, observe, ideate in terms of programs, etc., prototype, and then test in the market. Basically, through this, we inspire to inspire concept, conceptualize, and integrate into Europe and Africa. Some of the key approach has been stakeholder engagement and needs assessments that we done in 2020-24 in the 4 project sites. We have interactive design and feedback in terms of designs for the Enriching Africa platform, and then we've been test piloting as stated. So far, the findings, that's why we're doing these boot camps. Through a needs assessments during 2024, the key themes have been limited access to funding. Startups and innovators have struggled to secure early stage and scaling up funding across the 4 countries. Weak market alignment due to poor industrial collaboration, limited market research. Many research outputs do not meet market needs. Infrastructure gaps, the inequitable facilities that have hindered innovation and product development in Africa. There's low exclusivity in terms of women and youth face similar and cultural barriers, limiting their participation in the innovation ecosystems in Europe and Africa. And then policy and collaboration deficiencies. There's a lack of awareness across Africa and the different states, as well as Europe, in terms of innovation policies and international collaboration partnerships that restrict the ecosystem to grow and scale potential. So this workshop, we are going for the first one, basically due to the key finding that a lot of startups and innovators in Kenya, South Africa, Senegal, and Ghana struggle to secure early stage funding. This project is going to be about the fundraising journey to investment, how startups can go from lab to market into commercialization and securing investment in terms of their investment strategies. So yeah, I'm going to hand it over to our guest speaker, Dan Mabalis from Africa Arena. He will take you through the next stage of this workshop.
Thanks, Thomas, and hello everyone. It's very, very nice to be here. Thanks to the Seed team, amazing project that you guys are running, leading. It's really a privilege to be here. So my name is Dan Mabialas. Thomas, you've been struggling. So I'm gonna help you on that. But I'm the head of programs, chief program director at Africa and Africa Rise. So I've been in the field for about 5 years. Started to work in a tech company in Australia for about a year, then got back on the continent just after my initial studies at university and wanted to focus on the African continent in terms of innovation. So it's been now 4 years that I'm part of Africa Arena, helping to bridge the gap between founders and investors, especially African tech founders focused on tech. So I've had the privilege over 3 years to work with about now, I would say 600, 700 plus founders through the circuit that we organize at Africa Arena around the continent. So I will try to do my best to use this knowledge to bring you all into a good perspective of how to approach raising funding, especially in the African context, but also a European one, as an innovator, a startup. So yeah, that's a bit about me. You can scan this QR code, please. If you're in the audience, drop your LinkedIn profile link. We'll take it just after the presentation so that we can stay in touch. If you have any question afterwards, we're gonna have time for questions, of course, but if you want to stay connected, scan this QR code. I'm gonna drop my LinkedIn specifically, email, even WhatsApp. My goal is to continue to build, a community around this topic. So yeah, so Thomas, what I will do is I just want to share my screen on my side. I have the slides, so I'm all good. But I'm gonna start with an activity for you all guys. I think it's gonna be good for us to get to know each other. So let me know if you can see my screen. I think you can. I can't see now, thumbs up or whatever. So I think Thomas on my side, just let me know if you can see my screen. Then I know everyone can see. Can you see it?
No, we're not.
Can you? No?
No. Initially we
Okay.
could, but now we can't.
Now you can't. Okay. Okay, what I will do, I will share my entire screen to make it easier. Okay. Just give me one sec. Can you see it now?
No.
No. Okay. Can anyone else see it?
No. Nobody can see it.
Thomas, no? Oh, okay. Not sure what's happening. Okay, just give me a second. Okay. Let me try again. Can you see now?
Unfortunately, not yet.
No? Okay, cool. Okay, I'll try to do it differently. Then I think on your side, Thomas, you'll have to share your screen. I'm not sure what's going on, but that's fine. So we do it a bit freestyle. So I just had a couple of questions. So first of all, I just want to know from the audience who you are representing today. So I don't know how we're going to do that, but you can drop it on the chat very briefly. So are you coming here as a researcher, university or research institute, innovator, entrepreneur, startup, founder, as an ecosystem enabler or policy maker? So I have four choices. You can drop it on the chat. Or you're a researcher, entrepreneur, or you more of a founder, startup, or a policy ecosystem enabler, ecosystem builder or policy enabler. Ecosystem enabler can be an accelerator or working for a government agency or something in the likes. Okay, let me see the chat. Okay, waiting for your answers. Innovation Hub. Okay, nice to meet you, Naomi. And a startup. Okay, cool. Got it. Okay, Ali, ecosystem enabler. Got it. So that makes it, would say, 2. Do we have any founder here, a startup? I don't know him is a startup. Anyone else? Okay, Zandile. Cool, yeah. Enriching Africa. Ecosystem, big ESO. Okay, we take one last. I'm looking for founder startups. Ecosystem enabler. Okay, we have a lot of ecosystem enablers. All right. So that would mean that the conversation will be more about how you can support your founders. Okay, good. Got it. Okay, so second question for you all guys. Because we don't really have innovation, I will speak more for the ecosystem enablers. At what stage is or the startups that you're supporting or the innovators that you're supporting currently under? You can give me kind of a range, even in terms of percentage or where they're mostly focused on. Or the innovators that you're supporting, or even the startup that you're in, that you're building, still in research phase. So it's an idea, it's a prototype in the lab. It's already at a proof of concept, early pilot. That's the second option. Third option, is it ready to scale? So it's already past MVP, it's looking for customers and partners. Or fourth, it's already commercialized and it's seeking for growth funding. So four options. Still in research, proof of concept, MVP, ready to scale, post MVP, already commercialized but seeking growth funding, meaning you already have customers, you're already rolling, you're now wanting to scale. For ecosystem enablers, speak about your the stuff that you're supporting, so the community that you're managing. Okay, waiting for you on the chat. Okay, you're still in research and you're at proof of concept. This is the community that you're handling. Okay, got it. Thanks, Ali. So I put more emphasis also on that. Christina, Naomi, what about you? Or even Mackenzie. Let me repeat again, still in research, 1, proof of concept, 2, ready to scale, 3, already commercialized but seeking growth funding, 4. Okay, so the time you get to drop it on the chat, I would say I'm just gonna ask the very last question. What is your biggest challenge, or what is the biggest challenge at the moment of the community that you lead as an ecosystem builder in moving from this very early stage, especially for you, Ali, I saw your answer, to market? So what is really the biggest challenge? Is it funding? Is it finding partners? It can be anything. It is market research. What are the challenges that you're experiencing at the moment? Okay, Naomi. Okay, got it. So all for you from 1 to 4. Okay. So last question before I start with the presentation. What are your current challenges in terms of your community that they express? They say, okay, we're lacking funding, we're lacking partners, we're lacking this. In one word, 2 words. Okay, I think you can drop it on the chat. But because of the sake of time, I'm just gonna jump straight into the presentation. So I'm gonna skip, I would say the one of the next slide, but you can stay, Thomas, on the are you ready to raise? And the thing is, today I'm going to really speak and focus on the topic related to the fundraising journey to investment, especially focus on innovators and startups coming from a very early stage, because I see we have some that represent that in the audience, to an advanced stage where you're looking at some bigger amounts in terms of the funding that you require. Of course, the sectors are different. And the thing is, what we need to first see in the fact of being ready to raise is that many researchers, when they look at raising funding, they think that publication is mostly validations when it comes to funding, especially at a research level. But for investors, especially in the field that I'm working, that I'm operating under, the validation is more than that. It comes with an analysis of the market demand, the partnerships that you're able to raise, as well as the pilot project that you would, I would say, planned as part of the growth of the research that you have been running. So the thing is, it's more about thinking beyond grants, especially as an innovator, as a researcher, but mostly more focused on how to apply the commercialization of the research that you're running under and thinking more about private capital. So there are two key questions that comes into mind when you want to go to an investment path after you have built and you have prepared to grow into your research is how do you have a clear path to market from the innovation that you're building? That's the first question. And then the second question is, have you validated industry interests beyond the academia? So these are really the two key things that I'm going to speak about and unfold as I progress into the presentation. So if you move to the next slide, Thomas, I'm going to jump into what makes capital raising hard. And for you, I spoke about, I gave the question earlier. It's about what represent the biggest or one of the biggest challenges in raising capital for your innovation. So we're trying to tackle that, trying to discuss about it. But if I move to the next slide, what makes capital raising hard? There are many things. It's not a one-folded answer. You have the market, you have the customers that you can address, etc. But to be able to raise funding, especially at an investment capacity, it's about a process. So what makes capital raising hard is mostly that most innovators and founders, they struggle and they rush into their fundraising journey unprepared. And they do not create a process that applies to them that will support their efforts. That's what makes actually capital raising hard. Of course, it's harder in Africa. It's different from different regions and so on, especially from the sector you operate under. But mostly, what we have seen is that innovators, startups fail to raise because they come unprepared. So that's why I'm going to try to give as I'm on the next slide, Thomas, but that's why I'm going to try to give as a kind of guideline for for the conversation. So if we move to the next one, Thomas, on the key steps, that's the next slide. So when it comes to raising funding, you should see it as a race. So you get set, you're ready, you get set, and then you go. So the first thing that you want to do is, before even considering it, if you're even getting ready, you want to have your proof of concept, pilot data, and a clear IP. This is really number one that you need to focus on, especially when you come from an academia background. It seems straightforward, but you really have to focus on these three key aspects: proof of concept, pilot data, and then clear IP. Because if one of them is not well structured, then when you go forward and when you start to discuss with the investors and so on, they will ask you questions about where is your IP located, as you have well secure, and then you're gonna have to always go back and forth, go back and try to fix some of the things. Do you have clear data about your pilot projects and so on? what has been your test in terms of your the idea that you have been building in the lab. So all these things you need to make sure it's fully and well aligned and structured. Then the next thing is a concept that many founders still struggle to really embrace and get. It is the product market fit. It can be a good idea. It can be very useful in terms of research in academia and really at a university level or at a research focus level. But when it comes now to operating at a market and scaling and going to a commercialization phase, the product market fit is one of the most fundamental thing and applies to the business side. Many times we have founders that are very academic focused, so very brilliant. They do these very amazing innovations. Oh, I'm able to solve this. I found the last curated X, Y, Z. But then when it comes to now going to market and being able to put the product on the market and finding that fit, that's where things start to fall under the cracks. So you need to make sure that not only you have an innovation well lined up, but you also do your proper due diligence in terms of whose market am I addressing? Is there a demand for my product out there? And then from there you build the blocks of your stories with the storytelling and etc. Now, when you go on the set side, when you start getting up and then you want to start running into your fundraising, then you need to be able to identify aligned investors. That's something that I want to speak about specifically in a section. But many times you jump into fundraising without doing your first research about, okay, this is my idea. I have the product market fit. This thing will be in demand. I have my IP and my stuff well set. Now, who do I approach? So identifying them, creating a pipeline of if it's going to be impact VCs, government innovation funds, corporates, who can fund my idea. You need to spend time also doing that before even considering jumping into the investment path. Then building a great story, so meaning the pitch, the presentations, and so on, be able to articulate the story and the building blocks behind your innovation, and then preparing, of course, the key materials. So the deck, the one-page models, the data room. I'm going to speak a bit about it, and so on. All those things will be important, whether you're considering grant and etc. You don't want to jump into a grant, waste time building the materials, then jumping to another. You have to do this. You have to go back. You have to jump backwards. This is going to be something that will consume your time, and then you're not going to see the end of it. And then once you're ready, you go and you follow a structured outreach and a tailored storytelling that I'm also going to speak about. But it's all about process. One keyword that I want you to take out of this workshop is fundraising, going for investment is a process. It's a structured strategy that you build first and that you follow meticulously with discipline after. So we can move to the next slide, Thomas. On the pre-seed, seed, I think you are there. No, you jumped too far, I guess. I think come back 1, 2. Come back. No. Go back. I think we now have the same side. Okay, move again. Move up. Yeah, move up. One up. Okay. Okay, I see. Yeah, some sides are not appearing, but that's fine. Okay, so I'm gonna move up is fine. Move up. I'm gonna move to the slide after. Yeah, or ready to consideration. Yeah, move. I move again. Sorry for that, guys. Move again up. Up. I wish I could share my screen. Yeah, up again. Yeah, up. I think that's fine. Yeah, like I said, fundraising, full-time job. Yeah, move again. Okay, we're gonna stop. We're gonna focus on this one. So speaking about, yeah, you can stay here. That's fine. So are you ready to raise? I'm going to speak about what you need to consider when you want to raise funding. So the first thing, like I said earlier, with the set, ready, and go, you want to have a scalable research outcome opportunity, and that's what gets investors interested. That's actually what we call their lottery ticket. So an investor and a fundraiser, if I can, there was a slide, but it's not appearing here, but that's fine. But there's a slide that spoke about the different type of fundings available. And just going to browse through a few of them so that you know what are kind of the differences, especially when it comes to on the startup scene. You can stay on that slide, Thomas. So first one, of course, when you speak about funding available, there's the organic one, meaning your revenue, your bootstrapping, the fact that you are looking for customers, the fact that you get customers on board, that you get monthly recurrent revenue. This is the basic one. Then you have the non-dilutive funding. These are your grants that I'm sure many of you are seeking and pushing for. You also have debts that you can get from bank and that you can also get from VCs. So we call it debt funding, where they get an interest. And what I mean by non-dilutive funding is that they don't touch to your shares and your cap table. So your cap table stay intact. You have access to you still have ownership of the whole company, and you just raise debt. And then there's also what we call revenue debt financing. So meaning that you can raise a debt, but then you reimburse that based on the revenues that you generate. So it's also a good way to manage in terms of your cash flow. And then non-dilutive, you also have competitions. Yeah, it's also open out there. You have also cash prize that you can get as someone who is having an innovation and so on. So these are things that you want to try to have a look at, or the competitions out there that can give cash prize. There were a few that I saw, even very interesting ones that were focused on deep tech, startup also based in South Africa that raised about $10,000, but he was still in ideation phase. These are kind of interesting stuff that you can also look and try to have a go to. Then you have the equity financing. So you have angels and you also have private equity as well as VCs. So I would say it can be in three categories. So in terms of the equity financing angels, you have the high net worth individuals, friends and families, incubators that also give funding at a very early stage. So that's where you're raising about, let's say, up to $50,000, $100,000 in the likes, but it doesn't go really beyond that. Angel investment that can also apply, especially the ones that are focused on impact investment. They can focus really on innovators and research focused um, ventures. And then you have the VCs where it starts to become a bit more tricky and complicated. VCs are usually funding 100K plus. They can go to 50, but usually 100, 200K. And there's more at stake. That's why you speak now about equity. They ask for 10% of the company. They ask maybe 15% in exchange of 200K. And then they ask for crazy amounts in terms of how much, how many, in terms of if I look the term, yeah, revenues that you're generating, monthly recurrent revenues of about $10,000 for some, etc. So it's become trickier, but nevertheless, depending on your sectors, especially if you're in a green tech, or you can be in even sometimes deep tech, especially deep tech still wants to be developed in Africa. You will have access to those impact founders that can give you access to funding at that stage without asking for much in return. So it's a bit of grant slash VC model. And then you look at the bigger scale, when are you at a private equity level? When are you speaking about big funding of 10 million plus and so on? But at our stage, I think we are still at the pre-seed seed level. So we go up to, we speak really up to VCs. So what VCs are really looking for. Now coming, okay, I see the slides here. Now going back to the next slide, Thomas. I think try to come the one before. I think I was speaking about the stages. Yes, thank you. So in terms of the stage, again, very just to recap, you have approximately 4 stages that I would really focus on, but then you have more, Series B, Series C, Series D, and so on. But then when you look at pre-seed, to share pre-seed startups, usually it's up to 150K. Right now, the definition depends. Some you hear a pre-seed of 500K. Sometimes I get a bit surprised, but usually pre-seed, from what we have seen throughout the years, is up to 150, seed 150 to 1 million, sometimes more. You hear that. There was even one that raised a seed round of like, I think last time it was 5 or 10. So you have those definitions. Then Series A, pre-Series A, Series A, 1 million, 5 million plus. And then Series B above 5 million to 20 million. Series A should actually be Series B for the last one. Then move to the next slide, Thomas. Yeah, I can move. I think this one I spoke already a bit about it. Yeah, that's fine. Move. Yeah, next slide. Yeah, I'll focus here. Yeah, thank you. Can stay here. So as I was saying, when you are ready to raise, you can build a significant revenue business. As we spoke about, VCs are looking at X3, 5, 10 times return on investment. So for example, they want to see if you have a research based on bio-based materials. They want to see the industrial adoption that can really scale to $1 million of revenues over the years. If you're building an AI health solutions, for instance, and that you have this very fancy research that you have built, now they want to see, are you able to license it to hospitals? How is it going to be spread? So they really want to see the scalable research outcome of that. Now, the second thing is they also want, when it comes to investment, especially for the private investors, they want to see the large market. Will it be growing? Is it disruptable? Is it a market that can, in the next 5, 10 years, be growing? Or you're not going to lose the market with an AI generated app? Many things can be disrupted here and there. So they want to see if your market will grow and your market will still be stable over the years. And it's something that will always be in demand. Now, the next thing is they want to see if you have a good plan in terms of using your capital. So it's not only about, okay, I'm raising now, but they want to see if you go from stage 1 to 2, how are you going to use this funding to get to where you need to go? So let's say you have a KPI of saying, okay, I want this funding to grow my team. I want this funding to get to a monthly recurrent revenue of this much. They want to see this planned. So you are saying that you want to achieve this. How are you going to achieve that? And how is the funding connected to that? What are the steps that will be taken? So that's what they want to see. And also, if you to consider if you're ready to raise, you need also to see if you want that partnership investor partner, meaning that you are ready to have some control over your venture. If you're not ready to accept feedback from investors having a bit of control here and there, you can even apply for grants depending on their type, then it's going to be difficult for you to raise funding because you're not going to want to let go. And of course, if the timing is right. So it's really about checking: do you have sufficient traction? Are you personally prepared to raise? Do you have the mindset for it? You need more capital short term that you get from customers that usually apply, especially if you're at a very early stage. So let's go to the next slide, Thomas. Okay, and then in terms of alternatives, from what I've presented, you have research grants, corporate innovation challenges, like I said, the competitions. You can also find some IP agreements. This is also a way that you can also raise interesting funding. And then also you have, of course, like I said, bootstrapping, non-dilutive capital like grants, family and friends. I've heard beautiful stories of people that have raised sufficient funding from even family members, and then from there they're able to scale their ventures, even from university. But it depends also on your circle. So the main message there is that the first thing is seek for advice. The second thing is don't run it alone. You need to have that support in place. So let's move to the next slide, Thomas. Okay, alternatives. All right, let me see what's next. Just move slowly. Yeah, you can move next. That's fine. I'm gonna skip that. Great. We can stay here. So typical reasons why round fail, meaning innovators struggle or don't even manage to raise funding. The first thing is you have a too much. It's very too narrow academic technical focused pitch. What I mean by pitch is I mean the way you present it, the way your decks are shaped. There's no insight about the business side. It's just focused on my innovation is able to do this. This is I have the way I'm able to solve that problem is unique because I'm using this type of data, etc. All these things are good, but when it comes to investment, you want to shape it more on the business side, meaning how is it going to now generate um, um, revenue from taking from the lab basically. So you don't have a clear commercialization strategy, the IP protection or the unclear ownership. It's not clear who owns the innovation. Is it the university? Is it you personally? Is it shared among many people? It needs to be clear in terms of your IP. And then you cannot prove your traction. Even if you're at a very early stage, you need to always have this habit of building even a list of, I would say, waiting users. So for example, you are building that innovation and then you are going out there and saying, hey, if this thing comes to scale and this innovation will be built, especially on the deep tech side, how are you going to be one of the users? Do you want to use it? Or even it's a corporate. Once this thing is going to be ready, are you willing to purchase it? This can be very powerful and a way to prove that if the funding comes into your innovation, you are going to have traction. So you need to prove it somewhere, somehow. Like I said again, weak IP protection. You don't have an industry partner or you don't have any validation, and you're over focused on tech. Now, one thing that is key is that you don't have a good go-to-market strategy. I can't spend time speaking about it because we'll be running a bit short of time soon. But you need to make sure that based on what you're building, you spend time working on your go-to-market strategy. Proving that you have a good market doesn't mean anything unless you have a strategy to address that market and to go to it. So based on your sector, spend time, ask advice, go out there, but seek for advice to have a good go-to-market. How are you going to bring this product to market? And then the business opportunity is too small. Now, the second thing about the fundraising process is you're not focused on the right KPIs, and you're not targeting the right investors, and your storytelling is wrongly shaped. And that comes again to my first point. You're too academic or technical focus in terms of pitch. I was recently with one founder in a recent bootcamp that happened in Kenya, so 2 weeks ago, that shared a very, very interesting story. He has a business that is focused on agri-tech, in agriculture, and he has a bit of background in research. He's a doctor, so he built his research from the university itself. He said he launches his startup he had his startup for about 2 years, so he has been running his startup for about 2 years. The first year, he struggled all the way, not able to raise funding, not able to find an interest, and so on. And then he took time, he sought advice, and only by the spin, not even his innovation, because what he built is great. It's very top notch, great technology. But the thing is, just by the way he changed his speech, by seeking advice, the storytelling, the way he was translating what the problem was, what the problem that he was solving, the way the way it articulated the solution, so that everyone out there, even the ones that were not familiar with his innovation, could easily understand. These things spinned his partners, so he grew 10x in terms of revenues in the space of 3 months. He said just because of changing his speech story and his deck materials. So that's why I'm saying that it can be very, very tiny, but there's a saying that says that I like to use, the devil is in the details. It's in the details that you're able to make a big spin in what you're building. So even the ecosystem enablers that are in the room, spend time to really work on the storytelling and the pitch of your innovators. Sometimes the problem is there. Okay, we can move to the next slide. That was a quick story that I wanted to share to everyone. Okay, before you raise, yeah, move to the next one. I'm just gonna spend a bit of time about it, even 2 minutes. So, 3 steps that you want to do that is very important. So the first one is you want to focus on the business aspect. So you want to move from the innovation, the product. It's great. You have built all this stuff. We know it's working. Now you want to really focus on the business part. So industry application, the path to market, the research outcome, registering the business, the IP, etc., the financials, how are you going to build your financials, how are you going to calculate your unit economics, how are you going to, you become a businessman basically. Many founders, especially in the engineering background, don't like that, but it is what it is. As a founder, you need to be the first one to know exactly how to do your accountings and so on, because those questions will come to you. And unfortunately, if you want to raise funding, these are the things that you will have to focus on. So you need to focus on the business aspect first. The second thing is you need to seek for a lot of mentorship and advisors. This journey, the journey of a founder is very alone. You build, etc. You're busy, you're scrambling over the night. But please don't stay in your corner alone. Seek for advice. There are helps out there. If you're part of a community, go there, ask for questions. You go to events, seek for connections, seek for mentorship. Be humble enough to ask for advice, even if you're a doctor, you're at PhD level. There are things you can't know everything. And there's also a saying that says that, you know, when you want to succeed in anything, you need a lot of advisors. So that's something that we have seen is also very important when you want to fundraise. And then the investment readiness part. Once you have done those two well, the investment part comes at last, where you prepare your materials and then you start reaching out and then pushing to meet the investors. You want to have the structure and the basics right before moving to the next steps. Thomas, next. To the next slide. You can jump this one. I will speak briefly about it. Yeah, you can move one step before. With the okay, you can stick to it. That's fine. So the slide that you showed before, I will share the presentation afterwards. No worries. But one thing that you also need to do is, as I said, it's really a structured basis. So you want to build also that system, whether it is on Excel, etc., where you write your stuff, the KPIs, the IP materials. You want to have it on a drive. You want to have it well structured. Now, the second thing is when you want to raise funding, there's something that we call the investment memo that most of the investors use to motivate the fundraising at their investment committee. So the committee that they have when they decide, okay, do we invest there or not? Even at a grant level, they need to have kind of a board meetings where they decide, okay, do we fund this project or not? So one thing that you can do to make sure that your things are well in track is you can build your own investment memo. So having a document where you put your description, problem, solution, team, market size, competitive landscape, business model, traction that you have built, go-to-market plan, product roadmap, okay, from 2025 to 2028, how am I going to run about it? The use of capital, the risk that you have that you foresee in your innovation, and so on. This is also something practical that you can build around this point. Go to the next slide, Thomas. And also, please remind me about my time. If I run out of time, you can give me 5 minutes, 5 minute alert, and then I can wrap up quickly. But yeah, move to the next one. Yeah. Now I'm going to speak about preparing to meet investors. So in terms of the process, especially on a VC perspective, angel perspective as well, but even at, I would say even at a grant one, you have usually 4 steps, 1 to 4. The first one is they assess the investment. So they review your pitch deck, they review your background, they will check you. Then they will do a pre-screen check. So they will give you a first call, a light due diligence. They will do an investment memo on their side. And then after that, what will happen is that they will do a deeper due diligence. That's why they will ask you for a data room. And in the data room, you have what? You have stuff like your registration, documents, your financials, and so on. If you are starting to commercialize, if you don't have that, they will ask you for certain type of documents. So depending on your stage and depending on what you're building, seek for advice already about how to build a strong data room. Trust me, it will save you a lot of time later. And you want to foresee what's gonna come if you want to run into that space of raise funding. And then that's where you now go to the contract side, the term sheets, and so on. So these are really kind of the 4 steps. For a VC side, it can go to 10 weeks, even more, even a year. I heard actually some that spent a year and a half. So it's a long game when it comes to fundraising. So you have to be prepared in your mind for that. Move to the next slide, Thomas. Okay, let me see what's next. Yeah, we can move next. Okay, great. So step number 1, when you're going to meet investors, build a target list. And many of the investors and founders don't do it well. So what you want to do, especially on your side, depending again on who is in the audience. I started asking questions in the beginning, but now I see that we are 32 in the call. So I don't have now a good scope of who is who. But depending on your stage, of course, you want to have a focus on who could be interested and who funds the type of innovation that I'm building. So you can focus on research-focused VCs if you're in the research space, biotech, deep tech, agri-tech, government-backed innovation funds, corporates doing open innovation. One thing is that it's real work, and there's a lot of time wasting into that if you do it wrongly, especially if you ask to wrong intros. I have heard stories of some innovators that spent, I would say, 2 months speaking to find out at due diligence level that they were not a fit for the investor. So he didn't speak about it from the get-go. So they spent 2 months speaking to end up nowhere because of a slight detail. So you want to avoid that. Time is of essence when you're building something that you want to scale rapidly. So build it well and then have really a clear focus on who will be interested and who has the mandate and the funds to support my what I'm building. Next slide, Thomas. Great. So in terms of sources, databases, you have Crunchbase. Okay, you jumped too far, Thomas. Go back. Move to the previous one. Okay, you moved too far now, but that's fine. I'm gonna browse you quickly on this, but I'm in step one, Thomas, not step three. But yeah, step one, thanks. So in terms of the source, you have Crunchbase, PitchBook, Mercury, OpenVC. You have conference lists that you can request, especially when going to conferences. Google search, of course, we all know it. And also, especially mentors that can also give you insight about who you could contact. So you want to build that prospect list based on sources that you can find out there. And even now, ChatGPT, be careful, but sometimes you can find good stuff out of that. But it's really from word to mouth as well that you get access to this kind of data. Move to the next one. Thomas, step two. Yeah, step two. Then you qualify. You check who especially would be interested to fund my innovation, and then you find a path in. Cold emails are the worst when it comes to reaching out to an investor. But maybe your cold email game is good. I don't despise that. But try at best to have a warm intro from a mutual contact. So even if you find someone online and there's an official email, the first thing that comes into mind is, okay, who could introduce me there? Okay, maybe I know someone that works in a company that he's a partner to. That founder of or VC, let me try to get to them, etc. I would say 70% of deals that are closed are from warm intros. So that's what you want to try to get to. So now you want to network your way in, you go to conferences, events, etc. Don't push back events, but also be strategic to the events you go. Some events you will waste time there, some events can be life-changing. So choose carefully. And then that's what I can cover for step two. And then step three, Thomas, that's going to be the one of the last. Good. Yeah, you can move up. You can move up again. Yes, I covered it already. And then what you want to do, as an example, you can build a spreadsheet. You can take a screenshot of this image where you build columns. Like I said, it's a process. A process is a project. A project needs follow-ups. It needs a clear timeline and so on. So you want to build materials that helps you to follow up. So you can build the fund name, investor name, grant name, fund size, who can lead you there, relevant portfolio companies that you could contact, the last day you contacted the person, the contact info, who can intro you to. You can build a column according to what you're building. My key message is treat it as a project. So yeah, move to the next slide, Thomas. And then prepare a meeting. These are my last comment. I will take just 2 minutes, and then we wrap up this workshop specifically, and when we go to questions, then yeah, move to the next one. I'm just going to browse through very quickly. It takes time to raise funding. This was an example. You can move to the image. This is an example of a founder that had about 160 meetings to raise about $1 million. That was in the US. US is actually pretty it is actually pretty easier than in Africa, but still took a lot of time. So you will have to really take time to fundraise, and you need to be prepared for that. So let's move to the next, Thomas. Yeah, next slide. Yeah, so as I said, just going to browse through quickly. First thing first, research the investor beforehand, familiarize yourself with the investor previous affiliation with companies and organization. Check the investors are invested in whose company? Are they similar to me? Is it a similar background? Identify if the investor has been a founder before, recognize the niche in industry, do really your research before jumping in anything. Now, second one, you move to the next slide, is you craft an engaging investor pitch. So you want to try to do always something tailored. There are two types of, when it comes to raising investment and the first material that you send, usually two types. There's one that you present to an investor. So it's your pitch deck can be 10, 12 slides that you can present on the 5 minutes that you also use in competition. And then there's the investor deck that can go even to 20 slides. And that can include really the particular information, the roadmap, etc., etc. So you need to find the balance between the two. And then you articulate your vision. Like I said earlier, storytelling is very, very crucial. And the mix between the particularity, if I can use the right angle, or the uniqueness of the solution versus how you're bringing that to market to make it a multi-billion company. I'm just saying. So that's something that you want to be able to highlight in the materials that you're building. And then if you're at that stage already, next slide, you share the quality financial statement, or you share projections if you haven't regenerated revenue yet. It's all about projecting and showing the potential of what you're building so that the investors can see, okay, I foresee that this thing will blow. I'm going to invest into it. And then the next slide, and then do your best to demonstrate tractions and milestones. Okay, I will move to the next stage in 2026. I will do this, I will do that. This is going to be my KPIs. These are going to be the return of investment, and so on. You want to really show how you project things are going to be. And then justify your fundraising needs. Next slide, Thomas. This is really one of the most important. You get that money, whether it is grant, whether it is from VCs. What do you need that money for? Do you actually need that money? Are you going to use it properly? Is it well justified? Or are you going to waste it? Should it go to a founder that is more prepared than you? You can build something great, but if you don't have the right way of going about that money that you're receiving in your hands, and you're going to waste it by focusing more on one aspect, but it's the other aspect that is more important, it's really going to go down. Some businesses require more marketing, to grow, some businesses require more R&D to grow. So it really depends. So really be particular about it. And then next slide. Thomas, that's my last one. And then prepare for potential investor questions. They will ask you how much feedback have you received so far, how big is the market opportunity, it's kind of the usual. In terms of your market research, be sure to understand well how you calculated your market. Don't just go on ChatGPT and say, okay, I'm building this. This is my pitch deck. What is my market size? And then it will give you a number, and then that's going to be what you put in your deck. No, you need to do proper, justified research about how big is your market. And market is with the team. These are the two, I would say, key components when it comes to fundraising, especially from a private investor. From a grant, it depends. And then what legal risk do you see? How do you come up with these figures when it comes to projection, when it comes to whatever aspect? It's really now about the numbers. Like I said again, you will now have the hat of an accountant, the hat of how's it called? Someone that do projections in terms of forecasting, etc. You will have to learn it, unfortunately, because you have decided to become a founder in a startup. So that's the price to pay. But once you do it well, you prepare well, you have your ducks in a row, and you execute properly with really a target in mind, and you are really disciplined into your approach. With these small tips that I showed you there, you will be your chances, your odds of raising funding will increase. It's not guaranteed, of course. That would be that will be my last point. We are in a very fragmented and under-resourced market, which is Africa, but still, there will be opportunities out there, but you want to be ready. Thank you so much. I'm going to stop here. You can move to the next slide. This is just question time. And thank you so much for listening to me for that first part, which was the workshop. Thank you, guys. I'm going to open for questions now, and I'm going to try to answer them with my humble knowledge. And okay, I see we are now 33. Nice to meet you all. So yeah, do you have any question for me, guys? I don't know how long we have for questions, and then we move to the next part, which is the discussion with Christophe and Antoine.
We can do 5 minutes if there are questions.
Okay, cool. Oh, and as I shared earlier, everyone, you can drop your LinkedIn. I'm going to drop mine. Let's stay connected. I'm very, very keen to meet new people, to enlarge the community. Great work that Seed is doing. So yeah, please drop your LinkedIn, and we stay in touch. And give us a bit about your background as we wait for questions. Okay, any question? Anyone?
Dan, if there are no questions, we can move on to the fireside speakers.
Okay. Okay, great. So I think you can move to the next slide. All right, great. I'm gonna, on my side, handle the conversation. I think we have about 30 minutes. And I'm gonna welcome, and I'm gonna ask actually Antoine and Christophe, because I know everyone else has their camera closed, to open their camera. I don't know if you can pin them on the screen. But welcome, Antoine. Welcome, Christophe. Gonna have a brief discussion to also highlight what I shared briefly about raising investment session on the side of the research. Yeah, on my side, the journey, gonna speak about the journey from research to proof of concept to investor readiness. And to really make sense from this journey, we need to hear from people who live and breathe it every day. So I'm delighted to welcome two leaders on this fireside chat, as I mentioned them earlier. So first we have Christophe. Christophe Viano, who is the founder of Metis Venture Studio and Africa Arena, Africa Rise, who has been investing and building tech ecosystems in Africa for over 25 years now. Is going to have also the occasion, I think, as we unfold the conversation, to share a bit about his journey. And joining us from Europe, if I'm not mistaken, I'm not sure if you're in France now, Antoine, or anyone else, anywhere else in the world. We have Antoine Paysac from BPR France, driving force in connecting European and African innovators and creating funding pathways that bridge continent at BPR France. So, gentlemen, welcome. I don't know if you can hear me. I don't know if you can test your mics.
Thanks, Dan.
Welcome, Antoine.
We can.
Okay, welcome, Christophe. So let's make this as conversational as possible. I will throw in some questions, but yeah, feel free to jump in, challenge each other if necessary. I'm gonna try to jump one Christophe, one Antoine, and then from there, for the audience, what we're going to do is, as they discuss, I'm going to have a look at the chat, and you can drop your questions. And then after the chat, we can have more enhanced Q&A where you can take the mic. And in between, if the question is burning, I can see if I can jump in and share it. But I'm going to jump straight into the conversation. And the first section of the conversation will be more focused on research from lab to market. I'm going to start with Christophe. And as Christophe answered the first question, I will let him also introduce himself, a bit about also his background. But Christophe, let's start right at the beginning of the journey. So we have researchers, innovation here, who might be sitting on a brilliant IP. We have also ecosystem builders that have a community that surely have brilliant ideas that they are building, but haven't been translated yet into something investors recognize. So from your perspective, and as a start, what are the key steps to go from a lab to market, especially in an African context? I will try to focus on African context. What signals show to you, Christophe, that a research-driven innovation is ready for investors' attention?
Thank you, Dan, and very well done on your excellent presentation. Really very impressed with how you unpacked this, and I hope it will be useful and the recording can be shared to a wider audience. I think this is a great question you're asking, so maybe I'll give it in the context of the work we've done. So for context, my background is I've started my career in a corporate environment for 10 years. And then I was involved in quite a large management buyout transaction with a big player called LBO France in the energy sector, which is what brought me on the continent. And we exited that investment with a very nice return. We bought the business for $250 million. We exited at 1.3 billion, and we did 150 million of asset sales. So it was really a successful journey. And after that, I started in my garage a venture studio where we have built about 15 companies over the last few years, and Africana is one of them. I'd say, to answer your question, then I'd say number one is, I would say it's essential to ensure that you focus on solving a real problem, a validated problem. You know, often I see people in labs or universities or tech space that they're in a tech bubble. You know, they think there's a problem, they immediately in solution mode, they build something, and they can fall in love with their product. You know, this is a trap that is well known, you know, the engineer falling in love with this product. And what you should really be in love with is the problem, not so much the product. The product is here to solve the problem. You must be obsessed about the problem resolution, but there must be a problem that has a real product market fit. And I think that's the second step really, is that if you can dissociate yourself from the element and the solution element and keep going back to the customer, you must be customer focused always. What's going to make your early stage venture successful is how well you're doing your product market fit to perfection, if possible. And I think, you know, the tech doesn't have to be flawless. What the MVP that you're building initially has to solve is really the question of, are you going to get customers very quickly once you put your MVP out there? And there might be imperfection, and you must be working to constantly improve that. But you have to ensure that this solves a real problem, not your problem that you think you found. But so one of the methods we've used to solve these points is to encourage our founders and the tech teams working with them to have a sprint-based approach, to constantly put the solution that they've built out there, test it in real case scenario, go back in the lab, improve, iterate on it. You can do that 10 times, 20 times, 100 times. But the best product I've seen were teams that were adopting this very, fast process of constantly back to the field. in the lab to the field, back with data, perfecting the product in the lab, going back in the field, 100 times over if necessary. This is how you're going to get real product market fit, right? Now, once you've got that and you're going to, you need to ensure, number 3, that you have really a good go-to-market strategy and scalability plan. That is what's going to talk to investors. Now, assuming you got a product that solves a real world problem, you need to make sure that you are going to be able to scale this, because it's one thing to build a great product. It's something else. The histories of startups, and the reason 90% startup fail is, often failed scalability. One investor once told me, execution eats strategy for breakfast. You can have the best plan, you can have the best product, but if your scalability strategy is not well executed, you will fail. And the investors, if they don't see that you have a convincing scalability plan, will not invest. Investors invest in trends, not in dots. So they'll want to see a trend that go, very quickly exponential. That's the model of the entire VC industry. Now, number 4 is you need to make sure you have really strong business fundamentals when you speak to investors coming out of the lab, because you'll always look suspect by, being a techie or someone coming from a university and so forth. You must show that you have a very clear business model. How are you going to make revenue? And in fact, our advice that we always give to founders is don't raise money initially. Raise revenue. Your first fundraising money is actually revenue from your customer. If you're able to show that you're generating even a few $1,000s of revenue, it will go a very long way to raising $100,000s in equity or venture debt funding. So it is very important that you are very clear on your business model, your unit economics, and you're able to demonstrate to an investor how you're going to turn your innovation into a product you can sell and scale. And I think that, my last point would be to make sure that you engage the ecosystem early, use the platforms at your disposal, like Africa Arena or Euroquity, to leverage on these networks to be visible and to have people that are aware of what you're doing. Because there's something in the investment community, it's a domino effect. The investors tend to work together on deals. They like to refer deals. And so I often say to founders, it's very much about getting the first domino to fall and then leverage on that network effect. So I think I'll stop right there, Dan, on this question you asked me. And I hope that we can switch to maybe Antoine for the second question.
Oh, definitely. And I learned a lot from what you shared. I'm going to use that on the next workshop. But thank you so much, Christophe. And I retain that investor strategy for breakfast. Okay, I'll use it as a tagline. And jumping to
execution. It's strategy for breakfast.
Execution is I wanted to make sure. So now we're gonna move to Antoine now. And Antoine, just first of all, of course, you're gonna also introduce yourself. And I don't know if you would like to add anything that you think could be added to already much of the great insight that Christophe shared. And also from your side, that's the question that would follow, is when African teams that you see show up in Europe, let's say with deep tech, R&D driven innovation, so with their innovation, what convinces, from your experience, European-based investors to actually support them, and what actually convinced them that that solution could compete in the European market? So I will let you dive in also as well, Antoine. Welcome.
Yeah, and I hope you can hear me well.
Yeah, very
That's a lot of different points. First, I'll introduce myself then. So I'm Antoine, I'm working for BPI France, which is the French Public Investment Bank. And as you can imagine, there's a lot of things that we do as the French Investment Bank. We do financing, investing, and business support, and that's what Uquiz more specifically does. Is that it helps people connect. Mostly what we do is introducing people to other people. And part of that is through the pitching we organize, the events we organize, but also through the platform that Christophe mentioned earlier. So a free to use platform with a lot of investors on it, a lot of companies on it. That is used by our team and by our partners to kind of facilitate this networking thing. So that's what we do. We connect people, and mostly we connect entrepreneurs with investors. Now to get back on your question about what would be convincing to European investors. Actually, Christophe mentioned the two main points for me. The first one is traction, and the second one is this, I'd say, testing part. So the reason a lot of European investors are interested in investing in Africa is because Africa has urgency that Europe doesn't have yet. So for instance, if you take climate tech, Africa has to solve now issues that will be very relevant in Europe in 5 to 10 years. So that's pretty much a testing ground for technology. And we also know that there's a lot more iterations in Africa than in Europe, and more market adoption, like quicker market adoption for newer technologies in Africa. So that's what I'd say investors are looking at. And so Christophe mentioned going on the ground and testing this technology and then going back to the lab to have a better, I'd say market fit. That is very important, and that's is very important that this is reflected into the revenues that Christophe also mentioned. So, of course, it depends on the kind of products, but if you're building, I'd say, a digital product, such as a platform, or I'd say building bridges and something digital, it's really important that you have users, if not clients, users, and that you have feedbacks and that you can show that what you're building is useful to people or useful to potential clients. So then you need to build partnerships, even if it's not paid one, at least, working with the industry and show that, as Christophe also mentioned, you have an idea of how to commercialize your product. Now, if you're having, I'd say, more deep tech, if what you're building is more research based, then you cannot necessarily have users or cannot necessarily have clients, but then it's also important that you show that you're working with your industry. And specifically, if you want to go to Europe, it's important that you find partners that are established there, or if you want to move to other countries, or if you want to scale it up, which is often the big challenge, then you need to show that you've outreached to people. It was not only you in your lab developing something. You need to show that you talk to people and collaborated with them.
Okay, good. No, I think it was you are really emphasizing really what Christophe shared, which is actually proof that these are really the key points to make sure you have a line. And the ball back to you, Christophe. I have a follow-up question. I will speak more on the investor readiness side, and the pitch and the storytelling. So, Christophe, on your side, when you look, because I'm sure throughout your career you had to look at a lot of pitch decks. And when you look at pitch decks or mid spin-offs, what common gaps do you see in how African innovators present themselves? And what would you tell our room here in this call? What would you tell us in terms of advice to sharpen the value proposition when you portray yourself in your pitch deck, so that you avoid that instant no, I'm not interested? What would be your take on that?
Okay, I'll try to be very quick. I mean, often what I see, so I probably looked at 5,000 pitch decks in the last 8 years. We look at a lot of pitch decks, and every year 150 startups pitch at Africa event. I think, Dan, you probably had over 2,000 on your side. So often I see, the best ideas are not always packaged in the best way. So often you see founders with fantastic ideas or products, but to really package in a very efficient way. It's an art. The art of pitching, it's really an art, something that you're born with. Nobody comes out of university knowing how to pitch. It's specific training that is required, and use ChatGPT. ChatGPT is a tool to improve the fundamentals you've built. Everybody will see through you something with ChatGPT. It's gonna fly, guys. So number one, focus on building a very strong storytelling of your value proposition. Don't come up with the prompt on ChatGPT that spits you out a 8 standard deck presentation. It will show out in seconds in your pitch, okay? So when by strong storytelling, I mean, a lot of founders, they dive into the technology, again, to what I was saying in the earlier point, instead of clearly articulating the problem they solve, why it matters, and why they are uniquely positioned to solve it. Investors, they buy into a story of impact and scalability that can generate returns, not just features. Secondly, you need to show very strong evidence of traction. So even early stage ventures, they need to show the proof points, pilots, user growth, partnership, revenue signals, which is why I was saying, it goes a long way to say you have generating revenue at a stage startup. Data builds credibility. Make sure you are data driven in your pitch presentation, because a story with data is extremely compelling. Then, a third point I always mention is that make sure you have a clear financial narrative. Often you have startups that present overly optimistic projections with billions of dollars or hundreds of billions of dollars of market size. Who's going to believe that? Be specific. Have a clear financial narrative specific to your market segment, to your industry, not too wide, so it's credible. And make sure that you are clear on what is the go-to-market strategy to address this opportunity. Finally, I would say team. The investors, they're going to buy into the narrative and the traction and the financial story, but they will buy into the team. If you're a single founder, go back to the drawing board. You need to show a compelling team. Often startups, they fail. Who gets it right? Even some of the biggest from the starting hits, they iterated and they became decacorns. Why? Because they had teams that were very strong and that go through the story. There's this very because that Combinator, and not because they're convinced on the idea, because they told the guys at Y Combinator that they were paying their credit card bill by designing and building boxes of cereals branded with the candidates of the US presidency. That's how they made the money to go through building their startup. Well, that convinced Y Combinator to take them on, and the rest of the story. So, well-known story. The team is essential, so make sure that you don't underplay that.
These are
That's
great.
it, then.
Thanks, Christophe. These are great insight.
Pleasure.
And I actually really get that part of traction, user growth, revenue signals, clear financial narrative, and the board on your back, Antoine, building on that, and even from the U side, especially for early stage, pre-seed, seed. What signals matter most? Is it pilot with European corporates? It matters most for investors, for even a corporate that would want to support innovators. Is it pilot with European corporates, proof of concept well established, or what we see nowadays, is it compliance, governance readiness that actually carry more weight? How is it going on the European side that you see trending?
Well, once again, it really depends a lot on the type of company you're building. But
Mm.
of course, partnerships, I mentioned it earlier, is always beneficial for two reasons. First one is that it shows that you have real knowledge of the industry you're operating in. Apart from the solution that you're developing, and you know who are the potential client, potential competitors, you can always have like a competitors map. But if you have partners in the industry, it shows a much deeper understanding of it. And also because a lot of time, and more specifically, if you developing very research-based solution, these partners can become your clients. You mentioned corporates. Corporates are great examples of a partner that can give you resources and kind of guidance for developing a product, and then ultimately they could buy it as a client. So those are really good signs for companies. But I'd say anything that is related to a clear go-to-market strategy is a good sign. Christophe just mentioned it. The go-to-market strategy is often overlooked because you focus on, how much you're going to sell and what you're going to sell, but not exactly how you're going to sell. And actually, a few days ago, I was with an entrepreneur. I passed the detail, but they have a leasing model. So pretty much they have to spend a lot of cash to create the product, and then they only lease it. So my question was about, after the end of the pitch, I asked them how they find the cash to just produce so much and then only lease and wait for so long before getting the money back. And he told me, oh no, but actually we get paid directly because we're working with financial institutions. They just buy the things and then they lease them back to the consumers. And this was such a smart move, and this was a very important strategy and something that you should have said when you pitched. And I think this would be a very good sign to any investors to know that, you thought about the implications for your cash and for the consumers of selling a hardware product. So yeah, details on how exactly you're selling, to whom exactly, what's your plan? Like, do you plan on selling always to the same target group, or do you want to change consumer type once you've achieved some traction? I think any detail related to that, to the go-to-market, is a really great sign, because it shows that you know what you're doing and what you want to do.
Thanks, Antoine. Yeah, these are actually good insight that complement what Christophe shared earlier. And I want to zoom out a bit for a moment with you two, and pointing now back to Christophe. And we know that ecosystems play a huge role. I know that we spoke a lot about startups now, KP, etc. But now let's speak about the other players in the room. And my question for you, Christophe, also from experience, what you have seen, from your experience, what you have seen, and what you have been building in the years, especially with Africa Arena, is how can universities, incubators, and governments, or even another player that I might have forgotten, better support innovators so that they don't fall into the gap between R&D and commercialization? If I hand over to you, Christophe.
Yeah, that's a good question. It's more a policy or a ecosystem structure question, and it's one relevant for startups. So I don't know if there's universities in the audience, but I believe that universities must go beyond research to entrepreneurship to foster commercialization. It often you see silo type of organization with essentially very academically or lab driven, just to generate a research outcome. But what is a research outcome without any path to commercialization? It's probably a lost opportunity, right? So I think that you see that is why in the US or in Europe and now in China, you see a lot more success in the last 20, 30 years, is because there is a very clear path in terms of tech transfer, with specifically universities that have tech transfer offices foster spin-out pathways, and embed entrepreneurship training into the curriculum so that the innovation doesn't die in the lab, you know. Lab innovation is crucial to generate true commercial innovation, but it often stops at the lab. And I think the more we have collaboration between university and entrepreneurs, or entrepreneurs dropping out or coming out of university through technology transfer in some other ways, the more successful startups we're going to see and investable startups we're going to see. So I think but you know, that's an ecosystem thing. And I think if you look at what's going on in Morocco at UM6P, for example, or in Stellenbosch at Stellenbosch University, with their own incubator inside the university, you see great success there. And I think that, you know, maybe second point would be, I would say that the incubators and accelerators need to focus on not just training, but market access. I think, you know, we have a very underdeveloped network between universities and incubators and accelerators on the continent. And I think it's something that ought to be developed much more, in my opinion, because, you know, if you really want to have a great collaboration here, it needs to really connect in a practical way. So I was giving the example of the Stellenbosch incubator or in UM6P, because they have kind of almost created a value chain right down to commercialization and even investment. Universities now they invest. Stellenbosch University invests through their program. UM6P, they have UM6P Ventures, and they invest at the best time, because they invest at early stage when the idea is not fully valued, and they can make huge returns. And that's the model of many US universities, for example. So I think that model needs to mature much more. And I would encourage any incubators, accelerators to actually have very structured program with university, connect with their labs, see what innovation is coming through, and enable those innovation to flow through their incubation program. And finally, I think the government have a role to create an enabling environment. I mean, we keep on saying that, but you know, going back to the example of what happened in Tunisia with the first startup act on the continent, how fundamental this was in creating the Tunisian ecosystem as we know it today. You know, one of the area where we see the most innovation in AI and data science. This really started with great enabling policy from the government and a holistic approach with creating a fund of fund and enabling a lot of local incubators and connection between university and those incubators. And you know, I think they were highly successful because government played the role in enablement. And what I'm mentioning about Morocco is similar. This was driven by the government and the king himself. They started UM6P project 10 years ago. And now, you know, you see Morocco probably coming in the top 10 or even the top 5 investment destination. So I think this for me would be the three key thing, but it's more towards university, government, ESOs, you know, not so much founders.
Okay, gotcha. Okay, yeah, that's very insightful. And to jump now to Antoine, and also to build on that, we are piling up insight. Anton, on the financing side, you know, you're working really on that aspect as well. Capital stack, we have seen capital stack. That has been something that many founders underestimate, and afterwards we see that they lose, and that's real, even at a global perspective. And for you, especially in Europe, what's a smart sequence for African innovators looking at Europe? How should they blend grants, equity, and maybe venture debt to avoid over dilution, but still hit the milestone European investors wants to see? If I know the question is a bit technical, but if you could give us a bit of insight about how you, yeah.
Sure, I can try, but it's not only technical, it's also, and I've said it a couple times, it's very specific to each company. So it really depends on what you're building.
Yeah.
If your company is CapEx intensive, if it has revenue or not, like this is going to change your capital stack a lot. But there are like a few main ideas that you should take into account. The first one is that debt is a lot easier to get in Europe than it is in Africa. So that's a resource that you should use. Also because on the other side, CapEx and the cost of expanding your business has a tendency to be higher if you want to expand in Europe as well. So it's going to cost you a lot of money, but you don't have to kind of sell equity to get it because there are other ways and other tools. Now, to give another insight, maybe grants, they're very useful for beginning your journey and for the research part of your journey. But at least from a European perspective, you shouldn't rely on them too much. So European investors, they have a tendency to see companies that overuse grants as companies that don't have a clear path to market. So it doesn't have to be that way. You can build your customer base in parallel with receiving grants, but receiving grants is not necessarily like a green flag in Europe just because it tends to create companies that are overly reliant on it. So those are two kind of, I'd say, insights. But then once again, it really depends on the type of company that you have and I'd say the state of your revenues. Overall, the less you want to sell equity, like usually people don't want to sell equity. Now, if you go to Europe, there are other ways, but it's better to go towards debt, of course, carefully, than towards grants and relying too much on them.
Got it. Right, and it's gonna be my last question for you two. I'm gonna start with Christophe as we end this this very insightful conversation. So Christophe, Antoine, gonna hand over to you, Christophe, first. If you had one message, just one, for the innovators here who dream of scaling their research into a venture that attracts global capital, what would it be?
You go first,
One
Christophe.
message.
Well, I mean, we at Africa Arena have built the platform we've built in many ways, digital, online, events. It's all about building trust with a bunch of people who are going to support you for years and sometimes more. So I would say that it's really important to be very transparent, consistent, show evidence of execution, show that you have a global vision, but you're anchored in reality, locally, with the problem you're trying to solve with your users and your customers, and keep humility. There's been so many issues with founders chasing the VC roller coaster and raising funding to keep on a momentum that keeps, for example, them overburning versus what they should be burning. It's very important to remain very grounded. So I would say, it's all about trust, transparency, and keep grinding and think that you never lose those days where you had sleepless night building in a lab. You need to keep connected to that reality. And as the money flow in, as you're raising money, never lose that sense of humility and reality, I would say, because I think even the greatest entrepreneurs, kept that. So, yeah, in a nutshell.
Thanks, Christophe. And Antoine? What's a
Well,
message?
first I agree with Christophe, but if I could add something, it would be to, in general, talk to people, whether they are clients or potential clients, and keep trying to find clients even at the beginning of your journey, or either it's investors or partner. Don't wait to need it to talk to people. If you have relationship with investors even before raising a new round, then it's going to help you when you finally ready. If you have potential clients, people are interested in your solution, people you've done pilot with, it's going to be much easier to actually sell your product once it's ready. So it's important to do this kind of talking to people, networking thing, not in the sense of just networking to know people and kind of give business cards, but find a lot of people that have an interest in you succeeding. Because what an investor is someone that has an interest in you succeeding. What this partner that potentially could be a client is someone that has an interest in your solution being developed. So yeah, I'd say Christian stated there's a lot of platform, including Eurocredit, including Africa Arena, where you can find first people, secondly tools to connect with them, and also a lot of resources such as this kind of boot camps or webinars, whatever, to give you a little more insights. I recommend you use them.
Thank you so much, Antoine. And we're gonna end our discussion here. Thank you so much, you two, for this great insight. I want everyone to give a react, a clap, applause. I think it's here. Well done, guys. It was very good, very insightful. And we're gonna go to questions very briefly. I think we have about like 5-10 minutes. And we have a first question here on the chat. So you can drop your message on the chat / raise your hand. Well, I'm gonna start with the first one. So there is I'm just looking for his name, G.A. Van Roy, who is asking the question. I have a question around proposal writing. What do you think are the key aspects of a successful proposal? How important is small-scale data and statistical power as motivators? This might be founder specific, but perhaps you can highlight some key aspects of a well fleshed out proposal. Who wants to try to go? I think it needs a bit more context, but generally, yeah.
Yeah, I'm not sure what kind of proposal we're talking about, but if you're looking for grants, then just be aware of what is expected. Sometimes there's a really technical solution that is expected, and sometimes what is expected is output. And in the second case, be sure that if you cannot cover everything by yourself, or if you're not comfortable covering everything by yourself, make sure that once again you have the partners that complement you, so they can have a well-rounded proposal. But once again, I guess we need more context.
I think you're here on the room, right, Bertus? You can explain more in like 30 seconds? Are you here? Bertus? Oh, okay, you're not able to unmute. Okay.
He is able to unmute himself. He can just try to unmute himself.
Oh, I don't know if Thomas, you're the one who is able to do that.
No, he is able to talk.
Oh, he is able. Okay,
yeah.
Mr. Van Roy, you're able to normally on your side.
There we go. Can you hear me?
Yes, perfectly.
Okay, great. Yeah, sorry about that. Thank you for all of your insights. I'm coming from an academic side. I'm currently finishing up my master's in genetics in silviculture and plant pathology, but I am looking to kind of pivot into biotech development and especially NGO and community-centered work. So I suppose that would be my question to give more context is, when I am in a startup phase of a project, what are key areas of investment and focus if I want to grab the attention of a potential funder so that they can see that some due diligence has been done? I don't know if that clarifies it at all.
Okay. Does it clarify on your side? Do you want to have any go at it? Or even anyone in the room? I don't know if Christophe, you have any pointers on that. No.
So I think the question from this gentleman is about an investment proposal, right? And I think if that is the question, then I think I partially addressed it in my first answer. I think, if you are writing to an investor, whether it's an angel or a VC or a corporate VC, please do not send a 300-page academic research document. It will have zero chance of even being read. A VC reads, potential deals every day. Their brain is used to processing a certain format, which is usually in a slide format, under 10 slides. And so I think what you need to do is to make sure that you are able to summarize all the key elements of your proposal, and be super clear, unpacking the different elements, that we have in any good pitch proposal. What is the problem you're trying to address? What is the size of the market? You can provide all the sources and underlying research, and this can be appendix, or because what's going to happen is that if you get picked out of 100 for further investigation, then you have analysts from the investment firm or the VC, or even if it's an angel, they're going to read all the details to try to understand how you substantiate all these things. Then you need to explain what is the solution that you want to build, the product or the service. And then you need to show what would be your go-to-market to now position your solution to respond to the problem and capture the market opportunity, and show the team that you would be building, even if you don't know and you don't have all the team, because if you're starting, often you're still looking for your team. But then it would be important to show the founding members, and hopefully not just one, at least two. Why? Because any single founder entity would be deemed as risky. I mean, imagine, would you invest in a one-man show? It's always better to have a team, 2 or 3 ideally. Even better if there's at least a great diversity in the team on all factors. A woman always brings a lot in a founding team. Too many single team or men only team out there. And I think that's it. I think if you so rather start from building a synthetic proposal and linking it to your underlying substance, evidence, rather than and trying to build it bottom up, which can be very complicated and sometimes gets you off track. I think. I don't know if that helps.
Yes, I'm sure it helps.
Yes, thank you very much. I appreciate it. Thanks, Chris.
Because I've seen a lot of people from universities and labs struggling with that. So it doesn't hurt to do some of the online. There's a lot of things, online resources you can watch. I mean, just Africana, for example, there's 500 pitch online in our digital library. We have, you have local incubators or accelerators near where you are. I'm sure that can give you some training, but it's very important to get this right before you just dump a proposal on an investor, because you usually have one shot. Your email will be, we've already received this one. Having said that, persistency is also a quality, so never give up.
Thanks, Christoph. And the next question, I think Zandile, you had your hand raised, but I'm going to take 2 last. I think if you
That
had
was
your
a
hand
mistake on my end, Dan.
Okay,
Yeah.
cool. So the next question, I think, is one of the last. We take 2 more. Is are there VC that are into value chain financing, and if so, which sectors are they into, and where can we access them? This one I don't have insight. I will let the
Yeah. If we
Antonio.
could get a little more insight about the value chain financing part. I'm not quite sure
Okay,
what
Julius,
Julius means here.
Julius, you're in the room. Can you show yourself? You have access to your camera. Or you can expand more on the chat. Okay, I think Julius is nowhere to be found. Not sure if he's still on the call. Thomas, maybe you can check. But okay, Albert, yes. Can go ahead. Albert, go ahead. You are muted. Okay, so Julius tried to bring more insight. But Julius, you can try to unmute your mic as well. You can all unmute your mic and your camera, so you have control. So it should be fine. I don't know, Albert, if you want to write your question or ask a question. Yes, Julius. Hi. We can hear you. Can you speak?
Yeah, can you hear me?
Yes. Please go ahead.
Okay. All right, sure. So the thinking is that there are options that you would want to support startups or innovations, either through the silo approach or you'd want to look at the entire value chain. So at what stage or at what phase within the value chain is this innovation addresses? So let's say if it's about millets from the input side, which innovations are helping to grow millets, and then if you come to the aggregation and then the market supplies and then exporting. So I'm looking at it in its the entirety, holistic approach. So if I have an innovator working at the input side, someone that has come up with an innovation on exporting, is there VCs that do that entire value chain financing, or it's only silo approach? So that's the question.
Well, I can try to answer that. To my knowledge, and if I understood well your clarification, VC, they like to finance a specific solution. So they don't finance a company, they really finance a product. What they are aiming is that this product works and then it becomes a staple that everyone uses it. So if what you mean is, are there VCs that finance the company being innovative as a whole, rather than having a specific innovation or product? Well, I don't think so. Maybe business angels have a tendency to do that, but VCs, they really look for a solution or a product that can scale like in the country or the continent.
Okay. Maybe follow up is that if, let's say, a company, this VC has is investing in a particular product, and then somebody comes to build on and is adding value within that chain, are there series of VCs that come in and if I've invested in A and then A has built upon another value, goes to B? Basically, I'm asking in a tiered financing. So someone comes in at point A, another comes in at point B, another comes in point C, which all forms a continuum. Is their approach towards this?
Well, I don't have knowledge of it. Like, so once again, usually VCs, they're investing in one specific product and one specific company developing this product. And so there's a lot of IP protection and they're really trying to keep the market. Now, there are, I'd say, portfolio managers within VC funds, whose role is, for instance, to find other, I'd say, companies doing like products that are very related or finding potential partners. So it could be that a venture capital fund helps one of its companies finding a partner that will help commercialization and scaling up and everything, but they wouldn't necessarily invest in another company just because they somehow add to a product that one of their companies developing. I don't know if Christoph, you have more insight.
Okay, only Julius it answered, but yeah, the conversation could always continue directly with Antoine later on side if you would like to contact him. But yeah, I think you got a bit of insight about what he wanted to answer. I think this is it. I don't think there's any other question. I don't know if Albert is able to speak, but I believe we should end here. It's already 5 past. So again, thank you so much, Antoine, Christophe, for the conversation. Very insightful session. Thank you to the Seed team for making it happen. I think it's the first workshop from what I've heard. I'm not sure what how far the team is. But I will hand over back to Thomas and thank you for listening and joining. Thomas, you can take over
Thank
for
you,
closing.
Dan. Yeah, I just need to say thank you for Dan as our speaker in terms of the workshop, and our guest speakers. Thank you, Christophe and Antoine, for being here. For all the people who have joined, thank you very much for joining and staying in the workshop. It's been highly insightful, I think. And if you guys really want to get in touch with us and continue the conversations, please visit the Seed Project website and engage with us online on LinkedIn or Facebook, where we have the Seed Project has handles. So thank you very much for joining, and I hope you guys have a rest of a great day.